markets. That's interesting to look at all of these stock moves. But let's get a corporate conversation going as well now. Updater Services is the stock that we're looking at today. The company had actually reported a good set of third quarter earnings. So the revenue growth came in quite well. It was driven largely by the BSS segment, which has been increasing in terms of the contribution to the revenue as well. We have Raghu Tangirala, Chairman and Managing Director of the company, joining us now. Sir, thanks a lot for joining us today. This is Pavitra. So, just to start off, I want to begin by talking about the BSS segment because, like I mentioned, it has really been increasing in terms of the contribution. Last year, it was around 27%, and now it's almost 36%. There was also a note that we were reading from Motilal, which said that, your earnings could outpace the revenue CAGR in the next 2 years, which essentially means that your margins are going to go up. Can you take us through where you see the BSS contribution coming in, say maybe in the next 2 or 3 years, and what that could mean for your margins then?
Yeah, thank you and good afternoon. This is the strategy when we started off this BSS foray inorganically. All our BSS segments are doing well, including the one which was not doing well because of the IT hiring not happening. So that's also we see an uptick. So the next couple of years, we see the BSS margin going up. We are usually in the range of 12 to 13%. I think it will move up to 15, 16%. That's how BSS looks like. And traditionally, it's been the last 3 years, 65% of our top line revenue or earnings come from the IFM segment and 35% from the BSS.
Okay. So BSS will continue to grow. The margins will also look better is what you're saying. Let's talk about your IFM segment that you mentioned briefly, the integrated facility management. The growth there has been muted, and you spoke about it had marginal growth because you had exited certain unviable businesses in the IFM space. What was the loss due to this unviable business? What is the quantum of unviable business? And what is the outlook going forward here in terms of growth?
We don't have any losses because of these unviable businesses, but we didn't see strategically growth happening in those businesses. So we haven't lost money there, but marginally we made very comparatively lesser margins. So we had exited those businesses. So the growth looks muted for this year. Going forward, IFM also will grow between 18 and 20% the coming year. That is March 25.
Okay. Do you see the IFM business contribution coming down over the years, or you think it's going to stay at these levels?
As of today, both segments are growing at 20%. So this ratio would continue at least the next 2-3 years.
Okay, got that. And within IFM, can you tell us how much does just the manufacturing part contribute to this business?
We have roughly about 35% coming from the manufacturing segment.
Okay.
The rest is spread over IT, commercial buildings, healthcare, across other segments.
Okay, all right. So manufacturing is around 30%, you said, right?
Yeah, between 30-35%.
Okay, all right. That is about the two segments that we spoke about in detail. Let's talk about your plans with respect to acquisition. You were looking to grow inorganically. 400 crores of fresh issue was also the case in terms of IPO, out of which 80 crore was marked for M&A. Anything interesting that you've looked at? If you cannot, of course, give us the name and what you're looking at. Any timeline by which you will be finalizing something, and which segment are you interested in?
Like what we said in the roadshows, this inorganic acquisition will happen only in the BSS segment because of the high margin. We don't have a target, but we hope to do something in the next 2 quarters in the BSS segment.
Okay, something in the BSS segment in the next 2 quarters. Do you have an amount which is sort of earmarked for this acquisition? Any figure that you're looking at?
We have raised about 80 crores for this acquisition. This is the IPO. But we also cash a crore in the company. Anywhere between 80 to 150 crores is what we're looking at.
Okay, so that is on acquisitions. Your 9-month revenue growth was around 18.7%. How much of it was organic? And what will you close this and the next year with in terms of revenue growth?
Whatever you see 9 months is only organic. We haven't done any inorganic in this period. So we would hope to close this whole year at about 2,900 crores.
Okay.
So 2,450. Next year is 2,900.
Okay, so 2,450 crores in terms of revenue this year and 2,900 crores in the next year.
Yes.
Okay, all right, sir. Thank you so much for joining us today and giving us all those details. That's the word coming in from Updater Services. We did not speak to them after earnings, and there's been a lot of updates post that as well. But that's the takeaway from the management conversation. We'll do one thing. We'll slip into a short break. Next up, we'll talk about the new update where SEBI has amended small and medium REIT regulations, allowing them to raise funds starting 50 crore rupees and going to retail investors in a big way. Badal Yagnik, the CEO of Colliers India, will be joining us to discuss more on this. Stay tuned. Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.